Well, on that note, let's welcome in Anand Tandon. He's joining us on this leg. Anand, thanks for joining in. First thoughts on the sluggishness that we are seeing in, the HDFC twins of late. What would your view be? Are they still sort of a buy on every dip for you, both of them?
Well, for any decent term investor, if you're looking at a few beyond the next few months, I think you would continue to hold it. If you're a foreigner, obviously there is an issue. If you sell it, you may not be able to buy it back. And for the domestics also, it's most consistent performers. So no particular reason you want to get out. Yes, if you're trying to time the market, then I would think that you may get a bit of correction from here. But if at all there is any stock in the market that you want to continue to hold on, I would imagine it's the HDFC twins.
Okay, mid-cap IT is really, revving up now. Just look at some more stocks. Tata Elxsi's intraday chart should come up for you. Earlier, of course, we spoke about, Mindtree and Hexaware. Tata Elxsi, look at that move on Tata Elxsi. 1.7% higher is what we have. Let's pull out NIT Tech as well. Normally, these two stocks move in tandem. That, of course, is of the mid-cap basket. That one also, I think, is making a bit of a move. Yeah, you can see that. So, 1% higher on that. So, this space having a bit of a run here. Anand, good afternoon. Infosys has been the big mover. Of course, we have seen TCS make a move. This IT rally is back, you think?
Well, it has been for a while now. Last few months, we've seen very strong outperformance from this sector. And so long as the view continues that the rupee may continue to be weaker and the US market continues to be strong, presuming that there is no further upsets from Mr. Trump in terms of putting some more restrictions on Indian exports, I don't see any reason why you should be worried about IT at this stage. Continues to remain cheaper than the rest of the market, of course not growing very handsomely. But the likelihood is that the growth from here may actually pick up a bit, whereas the valuations is still within reasonable range. So yes, I think IT continues to remain, at least for me, quite among the favorites.
Anand, I'm going to go back to a bank stock, this time ICICI Bank, because there was this big hope trade that was building that maybe now the stock will really punch through the 300 level because cleanup is underway and perhaps we'll see management changes as well. But again, every time, this stock kind of flatters to deceive, and again, it's gone back in a trading band. What would you recommend on it?
So, my view is that corporate-facing banks is the place that you want to be in going forward, especially if you overweight on the consumer banks, which I presume most people are. So I think it is time now to look at moving into the corporate-facing banks. And I think, except for State Bank of India, if you look at the private sector, the only place that you could be actually in ICICI. As you mentioned, I think perhaps the worst is behind you in terms of actually both the management change, which is now very likely, and also the fact that the cleanup should at least be 70–80% done. You may find one more shock coming through, but aside from that, I don't think that there are too many hidden skeletons anymore. Valuations is also not very expensive at this stage. So on all counts, I think on a 2-year view, ICICI will likely perform perhaps better than the rest of the market.
What about Tata Steel, Anand? That's the one where we have seen quite a bit of volatility over the last 3 or 4 days. The ThyssenKrupp deal is now done, but the questions which are being raised is, are we closer to the end of the steel cycle or, high point of steel cycle?
Well, we are at the high point, there is no doubt about it. The question is that how long will it extend? Frankly, I am no great fan of what Tata Steel does. And, if you were to use them as a contra-indicator, the fact that they've gone and bought some more local steel tells you that the cycle is about to topple over and die. But cynicism aside, the reality is that the prices are likely to remain firm because the government is actually putting tariff barriers and the rest of the world governments are also doing the same. So given the fact that the Indian domestic demand looks reasonably robust, I think the only joker in the pack that can upset the apple cart to some extent is the fact that much of the capacity that was mothballed because they were run by companies which did not have capital is now likely to come through. So many of the analyst reports, of course, are already beginning to factor that in. But I think as usual, they will probably overestimate demand and underestimate supply. And I would argue that the supply shock can be fairly steep if and when these companies actually start producing. But till that happens, and I think that's at least a couple of quarters, if not a year away, I think the demand-supply gap is in the favor and the prices are likely to remain robust. So at least for this year, I think earnings from steel companies in general and Tata Steel should be quite good.
Okay, well, that's Tata Steel for you. Stocks holding up today. Some of its peers like Vedanta have had a far rougher session. Vedanta has undone some of its yesterday's excitement. That stock's down 3.5%.